Some more quotes of Warren Buffett too. Someone's sitting in the shade today because someone planted a tree a long time ago. This quote forms a foundational pillar of Buffett's long-term investment ethos. What he is saying here is that, in life as with investing, you have to think about the grand trajectory of things. Overall, there is no better time to start thinking about that path than today. A tree takes time to grow, and so will most smart investments. Start early, be patient, and let your money grow. 3. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. We shouldn't take him literally. He's not making 10 years the ideal or the cap. Rather, the point is that you should not hold a stock in the short term if you are not willing to hold it for the long term. In fact, Buffett prefers to hold a stock forever, an emphatic way of saying to concentrate on the long term. One implication of this is that Warren Buffett tries to find stocks that are worthy of being held for many years down the line. Instead of focusing on the short-term opportunities of a stock, he considers the fundamentals, the company's ability to innovate in its market, establish an industry moat, and consistently boost its profitability. This quote is especially relevant to passive investors. Instead of losing sleep over the short-term fluctuations of an ETF, you should focus on its long-term potentials and its fundamentals. Does it have good enough diversification? Is the expense ratio low? How does Morningstar rate the ETF? 5-star or 1-star? Is the ETF provider trustworthy? Is it liquid enough? How well does it track its underlying index, etc.? To be sure, the above quote does not mean that Buffett never sells a stock once he buys it. Just last year, Buffett exited his position in 15 companies, including Pfizer, United Airlines, Costco Wholesale, and JP Morgan Chase. He also reduced his investment in 22 other companies. Therefore, while his favorite holding period is forever, he does sell when he no longer believes in a company's fundamentals. The difference between Buffett and others who time the market is the reason for the sale, change in fundamentals, or to purchase another company with better fundamentals, rather than short-term volatility. In Buffett's own words, all there is to investing is picking good stocks at good times and staying with them as long as they remain good companies. Please support 6. The key to investing is not assessing how much an industry is going to affect society or how much it will grow, but rather determining the competitive advantage of any given company and, above all, the durability of that advantage. As said above, since Buffett prefers to hold stocks forever with no intention to sell, as long as they keep performing well, he focuses much attention on doing fundamental analysis. Before Buffett can buy a company's stock, the company must have a durable competitive advantage in its industry. Competitive advantage means that the company has something beneficial, better products, more efficient production methods, better value chain, quality brand, that competitors do not have. Such competitive advantage must reflect in its ability to charge higher prices, reduce cost of production, make more profit, and capture a higher market share. However, such an advantage must also be durable. A competitive advantage that lasts for just a few years is insufficient. Buffett wants companies that are able to sustain their competitive advantage for the foreseeable future, and this is evident in its stock holdings. For example, he owns Apple, a company that has been able to charge premium prices for its superior brand. Please like and subscribe my channel.